believe we are live. Good day, everyone, and welcome to today's pension briefing. Our focus today will be on separation essentials for staff members who are separating with less than 5 years of contributory service in the pension fund. My name is Dilbar Muradova, and I am part of the client services team at the New York office of the Pension Administration. Before we begin, I just want to give you a quick reminder about the structure of this week's pension briefings. This is the second round of sessions, and all of them this week are focused on separation from service. So this week, we're holding 3 sessions, today, tomorrow, and one on Thursday. Each will run for 90 minutes from 9 to 10:30 a.m. New York time. And each session is tailored to a different group based on the years of contributory service and age at the time of separation. So today's session is for those with less than 5 years of contributory service at the separation date. If that describes your situation, you are in the right session. If you have 5 or more years of contributory service, but separating before your early retirement age, which is either 55 or 58, depending on when you join the fund's participation, then tomorrow's session will be the one for you. And then finally, if you have 5 or more years of contributory service and separating between your early and normal retirement age, then you should attend the Thursday session. I believe we have also posted this information together with a link to check your early and normal retirement age in the Q&A chat for your reference now. Please take a moment now to check that today's session is the right one for you. If not, feel free to leave and join the correct session this week. Just a reminder or a disclaimer that the purpose of this presentation is to provide you with the general information. If there is any difference between what we present here today and the official UNJSPF regulations and rules, please note that the official rules will always take the precedence. All right. So in today's session, we'll be focusing on key information for those separating with less than 5 years of contributory service. We'll go over your benefit options, the practical steps you need to take, including required documents, and how to get ready for the separation process. We will also walk you through the UNJSPF website and the member self-service portal and show you where to find tools and information that are especially useful during your separation from service. This presentation will take about 60 minutes, and after that, we'll open the Q&A chat and spend about half an hour answering your questions. My colleague, Denise, who is the Chief of Client Services in the Geneva office of the Pension Administration, will be moderating the Q&A and will select questions that are relevant to the group. So we aim to finish this session by 10:30 a.m. Eastern Time. We really hope that you'll find the session useful and informative. Before we get started, I want to give you quickly the highlight of key takeaways we hope you live with after today's session. First, a clear understanding of your benefit option, so you know what to choose, or what choices you have when you separate, and feel confident that the choice that you make is the right one for you. We'll also explain how your future entitlement is calculated, which will hopefully help you make an informed decision. Second, we want you to feel prepared for separation. Know what documents are required, understand the processing timeline, and also be aware of what can impact that timeline. And finally, we want to make sure you know where to find support and information. That includes knowing how to use our website and the member self-service portal to access useful tools like estimate tools, and also know how to contact us if you need additional help. So with that, let's begin. Before we go over your benefit options, I would like to take a minute to give you a quick overview of the UN Joint Staff Pension Fund. So the fund currently serves around 240 members. That includes about 150,000 active staff members from the 24 member organizations, like many of you here today, and also nearly 90,000 retirees and beneficiaries who receive monthly payments from the fund, such as a retirement, disability, or survivor's benefit. In terms of funding, the pension fund is in a strong position. As of June 6, the fund held over $90 billion in assets, and that's several billion more than earlier this year, thanks to the positive market performance. However, as always, market fluctuates. The important point, though, is that the fund remains very well funded, with the funding ratio above 100,000. That means that we have more than enough assets to cover both the benefits we're paying now and those that we will pay in the future, which will include yours. So just to give you some context, in 2023, the fund received over 3.4 billion in contributions from participants like you, and paid out just over 3.52 billion in benefit. So the difference was easily covered by our investment assets. If you're interested in more detailed information about the fund's financial health, we have included a link in the presentation to our website's page on actuarial matters. There, you will find the detailed explanation about plan design and solvency matters. And if you'd like more detailed update on solvency, we recommend that you watch the town hall that was held on 11 April, where the Chief Executive of Pension Administration and the representative of the Secretary General for Investment provided full update on the fund status, including solvency. With that, we hope that it gives you confidence that the fund is secure and well positioned to meet both current and future financial obligations. Let's now move into the first part of today's session, where we'll look at the key principles that determine your entitlement from the pension fund. So the type of benefit you are entitled to from the pension fund depends on a few key factors. Most importantly, the length of your contributory service. You are attending this session today because at the time of your separation, you will have less than 5 years of contributory service. This is important because it means that you are not vested in the fund. That is, you have not earned the right to a lifelong benefit from the fund, and therefore your only benefit option is a withdrawal settlement, which is a one-time payment that settles essentially your relationship with the pension fund. So in today's session, we'll focus on the withdrawal settlement, which is the only benefit option if you separate with less than 5 years of contributor service. We'll also talk about a second option. It's not a benefit, but a choice you can make. So instead of taking a payout right away, you can choose to leave your money in the fund for up to 36 months after separation. And I'll explain shortly why someone might choose to do that. But for now, the key point is this. If you have less than 5 years of contributor service, you have two choices when you separate. Take a one-time payment from the fund, this is called a withdrawal settlement, or leave your money in the fund for up to 36 months in case you return to your end service and rejoin the pension fund during that time. Now let's start by looking at where you can find key information about your contributor service and how to estimate your withdrawal settlement amount at the time of your separation from service. The main source is your annual pension statement. This document is issued once a year, and it shows your full history with the pension fund from the date you joined up to the most recent year end. So right now, if you go to your member self-service account and click on the Documents tab, you should see your 2024 pension statement, which was just published last month. That statement gives you an overview of your contribution, length of your contributor service, and other important details as of 31 December 2024. You should check that statement if you haven't done so yet. In addition, you should run an estimate inside your member self-service portal using the estimate tool. I'll show you how to do that a bit later in the session. And this estimate will give you a good idea of the amount you might receive as a withdrawal settlement. Just keep in mind that it's just an estimate, not a final calculation, and it's based on the data we currently have on file, which goes up to the year end 2024. So again, to prepare for separation, make sure to check your annual pension statement and run an estimate inside your member self-service account. These two steps will help you understand your current status with the pension fund and what to expect after you separate from service. All right, so let's take a quick look at what a pension statement looks like, so you know what to look for when you check your own statement. Again, if you haven't done so yet, I strongly encourage you to do so, to log in to your member self-service and review your statements as soon as possible. So at the top of the statement, you'll see your personal details, your name, date of birth, and your employing organization. You will also see whether you are considered vested for pension purposes. That means whether you have reached at least 5 years of contributor service or not. For most of you attending this session, this will likely say no, it will show N, which means you are not yet vested and you're only eligible for a withdrawal settlement. It's important to check your name and date of birth to make sure that they match your official documents. If anything is incorrect, please inform your employment organization as soon as possible so they can update this information in our records prior your separation from service. Next, under Section B, you'll find two key dates. Your date of entry into funds participation, meaning the date when you became eligible to join the funds participation, and two, your beginning date of contributory service, the date when you started contributing to the pension fund. In most cases, these dates are the same, but not always, especially if you have done something like validation of prior non-contributor service, restoration of prior contributor service, or transferring in your pension rights from another organization, which is not a member organization in the pension fund, but for which we have a transfer agreement. So just like the case in front of us, this participant entered into the funds participation on 18 June 2024. However, they availed themselves of restoration option, and therefore their beginning of contributory service date is 19 July 2018. I will talk about the restoration option shortly, but for this participant, you see that their date of entry is not the same as their beginning date of contributory service. Section B also shows you your total contributory service as of 31 December 2024. For example, this participant had 4 years, 6 months, and 25 days, which means that this participant is not vested. And if you had any breaks in service or leave without pay, those will appear here, and they don't count towards your contributory service. Now, in Section C, you'll see the total amount you've contributed to the fund and the interest that you've earned. So in this example, the participant contributed over 23,000 and earned over 2,000 in interest. That combined amount, your contribution plus interest, is what will be paid to you as a withdrawal settlement if you separate from service with less than 5 years of contributory service. And finally, Section D and E, they cover things like additional contributions, if applicable, and your pensionable remuneration, which is used to calculate contributions. These details are more relevant to those staying longer in service who have earned vested pension rights. So we don't go into details now. So again, a reminder, please review your pension statement, your most recent pension statement in member self-service, check your personal details and contributory service. If anything looks incorrect or unclear, contact your employing organization or the pension fund as soon as possible, ideally before you separate from service. Of course, run an estimate using MSS tool before separating from service. In the example in front of us, this participant had less than 5 years of contributory service, therefore their estimate shows only a withdrawal settlement as a benefit option. So now let's take a closer look at two options available to you when separating with less than 5 years of contributory service: the withdrawal settlement and the option to defer your payment for up to 36 months. Before we go into those details, I want to highlight a useful resource. The pension fund created more than 20 short videos, and each of them just a few minutes long, and they are available in English and French and some in Spanish, and they cover various pension topics. One of them is called benefit options, which explains the different types of benefits available to the participants of the pension fund, including the withdrawal settlement. I will not play the video now, but you'll find a link to the video in this presentation, and you can also find it on our website, and I'll show you shortly where. Oops. In addition to the videos, our website includes helpful pages that are especially useful when preparing for separation. One of those is called benefit options page, and I'll show you again at the end of this presentation where to find that page. On that page, you'll find benefit eligibility chart and benefit comparison chart showing different benefit options based on the length of your contributor service. But for your group, those with less than 5 years of contributor service, the choices are limited to the withdrawal settlement or deferring payment for up to 36 months. However, if someone had more than 5 years of contributor service, they would see more options listed here. Right. Now let's talk about your benefit option, the withdrawal settlement. This is the only benefit you are entitled to if you separate from service with less than 5 years of contributor service and choose to receive a payment. So what is the withdrawal settlement? It's a one-time payment, it's a final payment from the pension fund that settles your relationship with the pension fund. Once this payment is made, that's it. There are no further benefits due either to you or to any of your survivors. And how is this withdrawal settlement calculated? As mentioned earlier, it is based on the total amount of your own contributions to the fund over the period of your participation, plus compound interest earned on those contributions. The interest rate is 3.25% per year, compounded annually. So the longer your contributor service, the more interest you accumulate. Now, one very important point. The employing organizational share of contributions are not included in your withdrawal settlement. You might be asking why. It's because the organizational share goes towards funding the overall pension fund system, including paying disability benefits and survivors' benefits. These benefits are paid regardless of participants' age or length of contributor service at the time of their disability or death, and the employer contribution help fund that system. So again, the withdrawal settlement is your contribution plus interest earned. It's a final one-time payment, and it does not include the organizational share. We'll look at the sample calculation next, so you can see how it's done in practice. For example, if someone separates after 4 years of contributor service and elects a withdrawal settlement, they would receive a withdrawal settlement that includes both their contributions and interest earned. So if they've contributed 20,000 and earned 5,000 in interest, they would receive a total payout of 25,000. And this is just a hypothetical example. So now let's consider what happens if you receive a withdrawal settlement and then months or even years later, you return to work in the UN system, and then once again qualify for participation in the pension fund. Can you connect your past contributory service for which you received a withdrawal settlement with your new period of participation? Yes, you can. And the way to do that is through a process called restoration. So restoration means that you are reactivating your previous period of contributory service by paying back the amount of the withdrawal settlement you received plus compound interest, and by a compound interest on the withdrawal settlement that you received. So you will pay back a withdrawal settlement that you received and the interest on that withdrawal settlement. And by doing this, you make the previous participation period part of your new participation. So let me give you an example. Let's say you had 4 years of contributory service and received a $25,000 as a withdrawal settlement. A few years later, you return to the UN and become the fund's participant again. So you start contributing again. If you decide to restore, you would reimburse the $25,000 that we paid you, plus compound interest on that $25,000 to the pension fund. And in doing so, you reactivate those 4 years for which you have received a withdrawal settlement. Now, let's say you work another 2 years and separate again. So by restoring, your total contributory service would be 4 years from the previous participation, plus 2 years from your new participation. So a total of 6 years of contributory service. You might be asking, why does it matter? It's because with this 6 years of total contributory service, you may now be eligible for retirement benefits that would have not been available to you based on that one participation alone. So restoration allows you to unlock more benefit options. One important thing to note is that restoration is completely optional. It's not automatic. So if you return to the UN system and rejoin the pension fund after having received a withdrawal settlement, you would need to apply in writing within 12 months of rejoining in order to restore your prior service. So if you ever separate and later come back as a staff member and the pension fund participant, keep restoration in mind. It could be a valuable option if you want to maximize your future pension benefits. Now let's look at your second option. If you separate with less than 5 years of contributory service. This option 2 is called the deferment of payment, also known as the deferment of choice under Article 32 of the Funds Regulation. This means that instead of receiving your withdrawal settlement when you separate, you can choose to leave your contributions in the pension fund for up to 36 months or 3 years from the date of separation. Why would anyone choose not to take a payment right away? It may sound counterintuitive, but there is a reason behind it. So if you return to UN service and rejoin the pension fund within those 36 months, your prior contributory service is automatically linked to your new service. You would not need to restore anything or repay a previous settlement because you've never received one. And here's the big advantage. You preserve your original date of entry into the pension fund, which determines your normal and early retirement ages. Let me illustrate this by giving you an example. Let's say a participant joined the fund's participation in 2013. Based on that entry date, their early retirement age is 55 and their normal retirement age is 62. But in 2014, the rules have changed. New participants joining the fund as of 1 January 2014 have an early retirement age of 58 and a normal retirement age of 65. So if this participant were to separate today and take a payout, then return later, they would be starting a new period of participation with a new entry date. And the new that entry date will then will determine their new early and normal retirement ages of 58 and 65. However, if they don't take a payout and return within 36 months, they keep their 2013 entry date, and with this, their original retirement age of 55 and 62. This can be a significant advantage for your future benefits. Of course, deferring the payment means that you don't receive any money during that time. And one important factor to take into account is that your contributions do not earn additional interest while they're held by the fund. So you earn interest on your contribution only up to your date of separation from service. But for someone who anticipates to return to the UN system within a few years and who doesn't urgently need money, this can be a smart move. So how does deferment work? If you choose this option, you simply fill out page 1 of your payment instruction form, PENS E6. You do not need to complete page 2 because you're not requesting a payment. You're just informing the fund that you want to defer your payment. If you return to the UN and the pension fund within 36 months, your participation is considered continuous with a break in service in between those contracts that is not pensionable and cannot be made pensionable. You'll then continue building on your original participation. And no benefit becomes payable until you separate from service again in the future, at which point your total contributory service will be calculated for a benefit entitlement. Can you change your mind? Yes, absolutely you can. If at any point during the 36 months deferment, you realize that you will not be returning to the UN service and you'd like to receive your payout, you just complete page 2 of the same payment instruction form, PENS E6, and submit it along with the required documents, which I'll go over in a moment. We'll then process your withdrawal settlement accordingly. And finally, what if you do nothing after deferring a payout? So if you do not return to the UN service and you do not request a payout within 36 months, you must submit your payment instruction as soon as possible after the 36 months period ends. And something to keep in mind is that if you do nothing for more than 2 years after the deferment period ends, meaning after 5 years of you separating from service, you may lose your entitlement to a benefit. So please stay in touch with the pension fund and act within that time frame. You'll find more information about this on our website under benefit options, including details of what happens in cases of breaking service without receiving a payout. So in summary, option 2, deferment of payment, lets you keep contributions in the pension fund for up to 36 months. You can use this time to see if you can find another job within UN system. If you do return within 36 months, your participation continues with your original retirement ages and your date of entry preserved. If you do not return, you can still request your payment at any time during the deferment period or shortly after it ends. And just a reminder, after 2 years post the deferment, you can risk forfeiting the benefit or the right to that benefit if no action is taken. So for anyone who thinks they may come back to the UN system within 3 years, this is a valuable option to consider. So if you separate from service, but do not take a payment from the fund, and then rejoin within 36 months, in that case, your participation in the pension fund will resume, and your new period of contributory service will be added to the service that you have already accrued before separation. However, the time between contracts will be treated as break-in service, and this break-in service cannot be made pensionable as the fund does not accept voluntary contributions. And second scenario is you separate, you do not receive a payout from the fund, but your break-in service is less than 36 months. In that case, if you come back into an active participation, you find another job within the UN system that qualifies you for the fund participation, and you come back after the 36 months. In that case, because your break-in service exceeds 36 months, you would have to start a new period of participation. And even though you may not have received a payout for whatever reason, if your break-in service exceeds 36 months, you will start a new period of participation in the fund with a new date of entry. You may apply to auto-restore the withdrawal settlement you were entitled to for previous participation by expressing interest in writing within the required timeline, and by doing so, combining the two participation. You may also request to receive a withdrawal settlement for that previous participation. Now we're going to look at separation from service and some practical information to help you prepare for the separation. There is another video that is available on our website that is titled How to Prepare for Separation, which you may find helpful. I encourage you to take a moment to watch it, as it provides useful guidance on the process. So how should you prepare for separation from service for pension purposes? One of the most important steps is to register for the UN Pension Fund's Member Self-Service portal if you haven't done so. This portal gives you access to essential tools and personalized pension information. And inside your Member Self-Service account, you can run pension estimates to understand what your benefit options are based on different separation dates. You can also download official pension forms that you may need during your separation process. You can view your annual pension statement and submit documents directly to the pension fund if your organization asks you to handle this part of separation process yourself. So before you separate, we strongly recommend that you also run at least one pension estimate to know what to expect. Review your personal data inside your pension statement, such as your name, date of birth, marital status, and total contributory service. If anything is incorrect, please contact your HR office as soon as possible to have it updated in our records. And number 3, attend a pension town hall like you're doing today. So well done for being proactive. You should also explore pension e-learning modules on the fund's website. They're great resources if you want to learn more at your own pace. And finally, contact us through official channels if you have any questions. I'll share the links and contact details shortly so you know how to reach us. And by taking the steps before separation, you will ensure a smooth process and minimize delays with your pension benefit payouts. Right, so we've put together an overview of the separation process that is filled with practical and useful information. It includes general guidelines on what to expect when separating from service, and more importantly, what you need to do. You can download a helpful flyer that we've created, and it's available on our website. It includes a step-by-step checklist of all required actions and documents. It's designed to be easily followed, so you can print it out and tick off each step as you go to make sure nothing gets missed. And finally, take a moment to review the instructions on our website about how to submit documents to the pension fund. The webpage provides various channels so the documents reach us in correct format without any delays. Again, you can run your estimate inside your member self-service account using the estimate tool. Inside the tool, enter a future separation date for your case and leave the second field for the fixed lump sum empty and hit submit request. At which point you'll have a wheel that will turn, wait for it to end until the message estimate calculation is completed shows up. Once the estimate is ready, go to the Documents tab, shown by the arrow here. That's where you'll find your estimate. The most recent one will appear on the top of the list with the date that's clearly shown here, the date you ran that estimate. Right. So if you're separating with less than 5 years of contributory service, here's what you, the participant, need to submit to the pension fund. You must complete, first of all, your payment instruction form, PENS E6. This form, this form is available inside your member self-service under the e-forms tab. It is pre-filled with your name and your unique 9-digit UNJSPF reference number, your unique ID, as we call it. The second document that you need to submit is a recent bank document. It could be either voided check or a bank statement. The document should show the account where you would like your benefit to be paid to. It should clearly say that it's under your name and verify the information that you put inside your payment instruction. And the third document is a valid government-issued ID. This document must show your name, your date of birth, and your signature. A passport is preferred. However, if you don't have a passport, national ID or driver license is also acceptable. And please note that UNLP is not accepted. Your employing organization will also send their separation directly to the fund. And they are the separation notification, also called PF4 from the payroll, and Separation Personal Action Form, SEPA. You do not need to submit those. However, please make sure to work closely with your employing organization to ensure that you reconcile whatever data you have with them as soon as possible, so they can submit these two documents to us as soon as they become available. When it comes to how to submit these documents, your payment instruction, your ID, and bank document, please follow the instructions from your HR office. Some organizations ask you to upload your documents directly through your member self-service, while others prefer that you give your documents to HR so they can send them together with their documents as one package. So just to be sure, follow your instructions, your organization's process carefully so there are no delays in processing your benefit. When completing your payment instruction form, please make sure to date it and hand sign it, as the fund does not accept electronic signatures. So you can print it, sign it, and then scan the form. Then you can upload this scanned copy along with the two other required documents using the document upload feature in your member self-service, if your organization allows it. However, as I mentioned, some organizations prefer that you submit your documents directly to them, so they can send the complete package to the fund together with their paperwork. So each organization has its own process, so it's very important that you follow the instructions to avoid any delays. Once the fund has received the complete sets of required documents, separation documents, we can begin reviewing, calculating, and processing your benefit. If any document is missing, we won't be able to start this process. On average, it takes about 15 business days from the date we receive all properly completed documents, both from you and your employing organization, before the benefit can be implemented. So you can expect your payment approximately 15 business days after the fund has received everything, assuming there are no issues or discrepancies during the processing. Right. So let's go over some important guidance to help you correctly complete your payment instruction form. So this form is essential for processing your benefit. So it's very important that you fill it out correctly. First, make sure to date and hand sign the form. Again, electronic signatures are not accepted. Then, depending on your choice, if you want to defer your payment for up to 36 months, complete page 1 of the form only. If you want to receive a withdrawal settlement payment as soon as possible, complete and submit page 2 only. So if you wish to receive a withdrawal settlement, please make sure that your banking details are complete, so don't leave out anything. That means include the full bank name and account holder name, account number, or excuse me, or IBAN, SWIFT code if applicable, and the currency in which you want to receive the payment. If you don't have a bank account, you may also request to receive the payment by check through a UN or UNDP office. Just make sure you know that clearly on your form. We also ask that you please provide your complete mailing address, your personal email address, and your personal phone number. So in case we need to contact you to clarify anything, we can do so easily. So just to recap, Submit page 1 to defer payment. Submit page 2 to request immediate payment of the withdrawal settlement. And please be aware that once you have made a benefit election and your benefit has been implemented and paid, you cannot change your choice. Now, where you can track the whether the fund has received your documents. You can do so inside your member self-service under the tab called Proof Documents. This section will only start showing information once we have received at least one of your separation documents. And it appears towards the bottom of that page. You'll see the table with the received date and accepted date for each of the required documents. So for this case, nothing has been received, therefore it appears empty. Once the 3 key documents, the separation notification, the separation personal action form, and your payment instruction form have all been received and shown as accepted, like in this example here, you can start counting 15 business days from the accepted date of the latest document is the estimated time until your benefit is implemented, assuming that there are no issues. All right, now we'll take a look at some pension toolkits, but before that, I believe we'll now open the Q&A segment for a few minutes now, so you can ask any questions. If there is anything that is still unclear, we'll and then we will address these questions after I go over the pension toolkit. Just a reminder, as you submit your questions, please avoid anything too specific or personal about your situation, because we can't access individual records during this town hall session. So we ask that you keep your questions focused on today's topic, which is specifically for those separating with less than 5 years of contributory service. All right, so with that, I will go to our website. One of the important tools that you can use during your separation is our website, which has a lot of useful information. So depending on your situation, different information might be of relevance to you. Today, you're here because you are separating from service. So you'll click here and it will take you to different web pages that you might find useful. For example, under the benefit options, you can read more about the withdrawal settlement and review different charts that we've developed depending on the number of years of your contributory service. We've also get a lot of questions about a possibility of rolling over a withdrawal settlement into an IRA account. And if this is something that you are interested in, please know that it is possible, and we've provided more information on this option here. You just, in your payment instruction, you just need to provide us with some additional information, and that information is listed here. You may also find useful to have an overview of the separation process in case you want more information in addition to what was discussed today. Here's also a very useful link on how you may submit your documents to the pension fund. Another important resource is videos. As I mentioned, they are available here under the resource tab. There are more than 20 videos. They're all very short but very informative, and most of them are available in 3 languages, in English, French, and some of them are in Spanish. You may also find useful our booklets. We do have one on separation, so you might find some additional information that is useful there. Also the link to the recording of today's session, as well as the previous sessions, are available on the resource tab. So you will find a copy of today's presentation and a recording on this webpage, as well as announcements about future events. So please keep monitoring this page. So you may also access information about member self-service under the resource tab. So here, if you have not yet registered into member self-service, we do include some useful tutorials in the video and paper format on how to register. You will need your unique ID number, your date of birth and last name in order to register. If you ever, during your registration process or login process, you encounter any issue with your member self-service account, you may contact us by phone, and the numbers are listed here, or you may do so in writing by emailing us at the email address listed on this webpage. If at any point you need to contact us, you can find that information on our website as well. It's a little slow, but here it is. So you can do so in writing. You can send us a message by completing a contact us form. You may also contact us via phone. We do have more than 60 toll-free numbers available, and we're open Monday to Friday, 24 hours a day. You may also visit us in person, either in our Geneva or New York office, and the information for each office is available on this website. So please do check that we are indeed open before visiting us. And finally, here's information on how you may submit your documents to the pension fund. And with that, I am done with this segment. So now I'm giving the floor over to Denise for reading out some of the questions that we will be addressing now.
Thank you, Dilbar, and thank you everyone for the questions. I didn't get to go through all of them, but I have a few that I can categorize while I look through the rest of them. So we had a couple of questions about, can I continue to pay contributions after I separate to either become vested or just to pay beyond separation date. So if you would answer that, that would cover a couple of questions. Thank you.
Thank you, Denise. So the fund does not accept voluntary contribution. You may contribute to the pension fund only if you are employed by one of our member organizations. There is nothing in our rules and regulations that would allow you to contribute after you separate from service. I hope that addressed the question.
Thank you. Yes, I think someone had been advised something about using termination indemnity. So we don't answer questions about benefits that you would get from your employer, but as Dilbar just explained, you cannot pay contributions beyond your separation date. Okay, so thank you. I have a couple of questions about the withdrawal settlement amount and about the organization's share, and I think this is a little bit more for tomorrow's topic, if you have more than 5 years. And I think the main question is the withdrawal settlement always the contributions and interest, or is there ever a time that you get the organization's share?
Thank you, Denise. So just to reiterate again, your withdrawal settlement will only consist of your own contributions that you've made during your active participation in the pension fund and the interest that you've earned. The interest that you earn on this contribution is only calculated up until your date of separation from service. So if you decide to avail yourself of the option of deferring a payout, just again, a reminder that you do not earn additional interest during that deferment period. And your withdrawal settlement will always only include your contributions. It will never include organizational share. We do see that misunderstanding quite often, but just to be clear that organizational share is never part of a withdrawal settlement.
Okay, thank you. So we have a question about, can you rejoin after age 65 and add to your benefits?
So, correct me if I'm wrong, Denise, the pension fund has no say in at what age you can rejoin a member organization. It is dictated by the staff regulations and rules of the employing organization. For us, what matters is whether the contract that was given to you when you get another contract, whether that contract qualifies you for the fund's participation. We have no say at what age, if there is an age limit for employment. Yeah.
Thank you. Yes. So if you are over the age of 65 and your organization hires you and you become a participant in the fund again, then you would have a benefit option at the end of that period of participation. So I think there's different scenarios of what that would be, but because we're today just dealing with the withdrawal settlement option for those with less than 5 years of contributory service, I think that's probably a sufficient answer. The next question is, do I need to wait until I've separated to submit the forms? So I'm assuming this means the payment instruction form and the supporting documents. Or can I do it in advance if I know my planned separation date?
Thank you, Denise. Yes, you can start preparing early and you may start submitting your documents before you actually separate from service. You may do so a month in advance, 2 months in advance. However, please be advised that the fund will not do anything with this document. So we will not start reviewing your file until you actually separate from service and until we have received the separation documents from your employing organization. The two documents that I've mentioned during presentation, which is the PF4 and separation personnel action form.
Okay. Now, we have a question from someone who's just recently joined in 2025, and they want to know if they can run an estimate, or seeing that they don't have a pension statement yet.
Thank you, Denise. That's a very good question. So just to let you know that the member organizations of the pension fund, they report your financial data to the pension fund, which relates to the pensionable remuneration that was used to deduct your contributions amount. All of that data is reported once a year. So for 2025, we expect that information to be reported to us early next year. Therefore, if somebody joined the fund's participation in 2025, unfortunately, you will not be able to run your estimate because we do not have that financial information that is necessary for you to run the estimate. We don't have that information on file yet. So if you are interested in running or in knowing your what your estimated withdrawal settlement would be, I would suggest looking either at your salary slips to see what were your monthly contribution amounts and trying to sum them up. If you are a member of the UN of the specialized agency, you might also want to reach out to them to see if you can update that information. Thank you.
Thank you. We have a question about tax. So regarding tax on the withdrawal settlement, and specifically for someone who is a US citizen.
Okay. So unfortunately, the fund is not in the right position to advise you on the taxation matter beyond what is available on our website. We do provide some general information on the taxation of the UNJSPF benefits on our website. However, that's just general information. If you need a specific advice on the taxation of your withdrawal settlement, and if you are someone who is residing in the United States and have to pay taxes here, the best resource I would say would be asking our colleagues at the UN tax unit, who will be in a better position to advise you on that subject. Another good resource could be an accountant who specializes in UNJSPF benefits and the taxation.
Thank you. We have a question that's quite general, and it might have been just around the time you were talking about where to find things on the website. But the question is, where is best to seek follow-up support when working on this? So I'm assuming that means working on getting all of your separation documents together and running your estimates, or just preparing for separation.
So yeah, again, if you we have developed a lot of useful resources that are available on our website. If I don't know if that colleague was able to follow me as I was going through the website, where you might, I can quickly share again just for information purposes. So if you ever need to contact us, here are the ways you can do so. Just a reminder, if you are a participant of the UN, of the specialized agency like ILO, WFP, please contact your SPC secretary. For anyone else, for those who are employed by the United Nations, UNHCR, UNICEF, you can contact us for additional support, and here are some of the ways you can do so. Also, on our website, there's some important guidelines that we've included, such as overview of the separation process, the benefit options, how to submit documents to the pension fund, etc. So please visit our website, as it contains a lot of useful information.
Okay, thank you. So we have a couple of questions still about the withdrawal settlement. I'll put them together. One is very specific and the other has to do with changing from the deferment period. So you had mentioned that you have up to 36 months from your separation date to make a benefit election. And the question had to do with, can you change to choosing a withdrawal settlement sometime after you've deferred your decision? So that's, can I change my mind and ask for a settlement only within 6 months? Is there an option that I change this at a later stage? So if I understand it correctly, they've chosen a deferment of decision, and then maybe 6 months later, they ask for a withdrawal settlement. And then let's just take it one step further, that then they change their mind at a later stage. So maybe you can answer all of that. And then add to that the question of, can I have my withdrawal settlement paid to UNFCU?
Okay, thank you, Denise. So just to address the last question is, you may you can receive your withdrawal settlement in any commercial bank. So as long as that bank can receive a payment from us, you may put the information of that bank account in your payment instruction. Now, what if you elect to defer a payout of your withdrawal settlement for up to 36 months, and 6 months later you change your mind and you decide that you would like to receive your withdrawal settlement as soon as possible? That is possible. Just again, if that is what you want, you will then you need to fill out page 2 of your payment instruction form, hence E6, and submit it together with your ID, a valid ID, and a copy of bank documents. And with that, it will take us approximately 15 business days, assuming that we've also received your separation documents from your employing organization. It will take us approximately 15 business days to pay you that withdrawal settlement. However, if you then again change your mind and say that you want to defer, not to receive, but defer, it will really depend on how soon you inform us of that decision. If we've already calculated and implemented your benefit, there is no way at that point to change your mind. This is it, that we will then proceed and pay you that withdrawal settlement. However, if you decide that no, you don't want a withdrawal settlement, but you want to defer for up to 36 months, and we are still in the process of implementing your benefit, so we have not calculated it, then it might be possible to proceed with that choice. It will all depend on at what stage we are with processing your benefit.
Thank you, Dilbar. I think you covered another question too, which was about the 15 business day processing time. So you answered 3 in one. Okay, so there are a couple other questions. One is about interest after separation. So whether your contributions continue to accrue interest after your separation date.
Thank you, Denise. This is a very common misconception that we see with our participants. So you earn interest on your contributions during your participation with the fund only, active participation, meaning that you will earn interest on your contribution only until your date of separation. Your contributions do not earn interest after your separation date. So even if you leave your money with the pension fund and decide to defer the payout for up to 36 months, please be advised that your contributions do not earn interest during that deferment period. I hope I addressed that.
That sounds clear. Thank you.
Mm-hmm.
I know it is a frequently asked question because we have this deferment period of 36 months. So I think that's clear. So no interest beyond separation date. There was a question about restoration. So you had mentioned you can restore your withdrawal settlement if you return to active participation in the fund. And the question was, does it matter how much time was between the separation and your re-entry? So could it be as much as 10 years and you can still restore when you come back into the fund?
Thank you, Denise. Yes, absolutely. The time from your date of separation for previous participation and the time when you join again the pension fund as a new participant, that time does not matter for restoration purposes. So let's say if you elect and receive a withdrawal settlement this year in 2025 and become a fund participant, the fund's participant again in 2035. At that time, you may elect to restore the previous contributory service by repaying the withdrawal settlement that you received and the additional interest on this withdrawal settlement. So the time between your previous participation and your new participation is irrelevant for restoration purposes. But just to let you know that the way we calculate that interest that you have to pay on the withdrawal settlement, it will be at 3.25%, and it will start from the date when you receive that withdrawal settlement to the date when you first expressed your interest in restoration. And please be advised that expressing interest in restoration has a time limit. You may do so within the first year of rejoining the fund's participation, or if you separate before that 1 year end, prior to your separation from service again. All of that information is available on our website, so if you wish to learn more on the subject.
Thank you, Dilbar. That was clear. So yeah, that's called restoration. So I think that excuse me, would be the topic to look under on the website. We have a question about, can you tell me exactly when I would be vested at the 5-year mark? So maybe you can address that question and maybe also just throw in mention of part-time I don't know if that would, nobody has asked about part-time, but you could address it, I guess, also with the question about knowing when you're vested. Thank you.
Denise. So you earn the vested pension rights, meaning the right to a lifelong periodic from the pension fund, after you have contributed to the pension fund for at least 5 years. It can't be 4 years, 11 months, and 30 days. It has to be 5 years exact. And that information, you can find that information inside your annual pension statement. It will, under section B, as I showed you earlier, you will see your total contributory service that you've earned for the year end, for which we have published a pension statement. So it's very important to consult with that statement to see whether you have earned vested pension rights or not. If you are someone who work on a part-time basis, as long as you work for 50%, you would be earning contributory service. So for example, if you worked for 5 years at 50%, you would be considered vested because you have worked for and contributed for 5 years. It would not be equivalent to 2.5 years of contributory service. It would be, it would matter for other elements, like when we would calculate your benefit, but for vesting purposes, the part-time is, as long as you work for 50%, we would count actual years of you contributing to the pension fund.
Thank you, Dilbar. And did you mention if anyone has any breaks in service during their participation? How would they know when they've actually met the 5-year mark?
So break in participation, again, the pension statement would be a good document to consult, because that document will give you the information that we have on file for you as it was reported by your employing organization, and it will list your total years of contributory service, and also if you had any breaks in service, it will also be listed there. Breaks in service do not, as meant by what it stands for, it is break in your participation. They do not count towards someone's total years of contributory service. So we do not take into account break in service when we look at whether someone is vested for pension purposes or not. So we look at the numbers of years that you were actively contributing, working and actively contributing to the pension fund when we determine if someone has vested pension rights or not. I hope I addressed that, Denise.
Yes, I think I mean, I just sort of added to the question about the part-time and the breaks in service, but the question had just been about when do I know, how can I find when I exactly meet the 5 years? And I think that you've covered the questions, and we still have 5 minutes, so it's.
I believe we are going to post a brief survey in the Q&A chat right now. We would be very grateful if you could kindly complete that survey and let us know how it did. It will really help us in preparing for the next sessions as we develop them. And if that is it. I want to thank you all for your participation today. I hope you found this session useful. And for those who have more than 5 years of contributory service, please know that there are 2 other sessions that are scheduled this week. So we hope to see you there as well. With that, thank you all very much and have a good day. Bye.